Ladies and gentlemen, Kim here. Welcome to the Daily Update. Hope you guys had a good day trading. Today, market is up about 1.6% there. On the S&P Nasdaq, 2.3%. Along the semiconductor Dow, 1.5%. Russell 2000 did similar. Transformator move 2.5% positive. Banks 1.3%. Looks like energy and the emerging market is the only sectors today printing negative numbers. Biotech, healthcare up 1% along the utilities. Looks like home builders and the retail, these guys made close to 4% move today. Bitcoin up, gold, silver, miners, these guys are red today pretty heavily. Looks like dollars flat, oil's down quite a bit, treasury bond down, VIX is down about 6% there. Let's stick with S&P 500 ETF. Spider! 65-minute chart. Here, so this is where we closed yesterday. And we talked about the candlestick pattern right here, that hammer candle that needs to see a follow through. And we also talked about the fact that we need to see not only just a follow through, but we need to see a strength on the first few hours. We're definitely on that first hour. Look at this long, this bullish candle that pretty much engulfs just one day. We engulfed all of this on that first hour, and a lot of things been achieved on that first hour. And let me explain to you what happened on the first hour. First of all, because of this strength on that first hour, now we can say that we're seeing the follow through after that long-tailed hammer candle. We both desperately looked for that follow through, and we saw that. Not only that, remember we also talked about that. Talked about the fact that yesterday that midterm moving average has been acting as resistance, along with my micro term. Well, we blew right through it. Not only that, my short-term moving average has been acting as resistance for a couple weeks here. And it looks like it's now supporting the buyers here. This is the first time we see that short-term moving average flipping and to support the buyers maybe in this entire month of April. And another thing happened here. So after that first hour move, we consolidated right here, bull flagging pattern. And the the good news about that bull flagging pattern is that it occurred above the short-term moving average, and so it actually was favoring the buyers. If we can see a breakout after that, consolidational, continuation flagging pattern, and we see that a breakout on the last hour, and we're retesting that gap area. Bulls are up here once again to finish the job that they weren't able to finish in the last two occasions. You can see right here, got rejected. You see right here, got rejected. This is a third time bulls are trying to fill this down gap that was opened up back in April 11th. This is very, very important for both bulls and bears. So what bulls need to do is to make sure to fill this gap. Don't play around here, because last time when bulls failed, things got difficult for about 8 trading sessions or so, right? So this time, if you don't see another more than a week of shenanigans to the downside, bulls definitely need to fill this down gap. Once this down gap gets filled, it will act as resistance. So if bulls want to avoid it, if bulls want to get into, go up and fill this down gap too, maybe in one day, because you can see this down gap is still open. Keep in mind, last time when bulls failed to fill this down gap right here, right? They feel the most of it, but they left about 10% of the down gap. We talked extensively about that back in early April. So if bulls want to not only fill this one, but want to fill this one as well, what they can do is gap it over, right? And then go up and fill it. So two things gonna happen once you gap it over. Once you gap over the down gap with an up gap, this right here, the entire base is gonna turn into an island. And this gap is gonna turn into an island bottom gap. Very strong reversal pattern. And with that, you have enough momentum because now we're seeing a breakout out of this base. And with that island bottom reversal move, there will be plenty of momentum that bulls can utilize to get up and fill this down gap once for all. And you know what happens if we do see something like that, because boss bears are hanging around at 460. And that's going to be the ultimate challenge for the bulls to get up here and fill this gap, battle with the boss bears if they want to make a way for the new all-time highs. Let's check out that oscillator, see if we can extract any more information. So this is coiling setup we've been talking about. So this coiling setup right here, as you can see, we've been coiling back and forth since like mid-March, and we're finally breaking out to the upside. Remember what we talked about? We've been extensively covering this. I've been extensively covering this every single day last couple weeks, that there's something happening. It's very, very suspicious that we got these lower lows in the price action while we have a higher lows on that oscillator. This is like long, drawn out, bullish divergence, right? And then now, finally, we're seeing that breakout. You can see that extension, that advancement on that oscillator breaking through the resistance, because it's been bound by this oscillator resistance for like a month and a half or so, or about a little over a month. So this is a very good, constructive move from the buyers. All they need to do now, because we're seeing the oscillator, we're seeing the energy getting released to the upside. So what the buyers really need right now is just need to go up and fill this gap. If these two down gaps get filled, bulls will get up there, battle with the boss bears. And it will be interesting to see how this battle is gonna pan out, because the last time when bulls got up and faced the boss bears right here in late March, remember, they had to retreat for a little bit, and now they might, challenge the boss bears before they make a way to new all-time highs. I'm gonna come back for you. We'll reassess the situation. Enjoy your evening and good trading tomorrow.